Stocks take a plunge after China retaliates in their own trade war. Stocks fell sharply Monday as a trade war between the world's largest economies intensified, with China retaliating against 45's latest move. The Dow plunged more than 900 points, while the S&P 500 dropped 3.5% and Nasdaq sank 4%. The Nasdaq was on track to fall for a sixth straight session, which would be its longest losing streak since late 2016. The S&P 500 also headed for a six-day losing streak. The Dow was set to fall for a fifth straight day. The major indexes were headed for their worst day of 2019 and have also fallen more than 5% from record highs set last month. Trade bellwethers Caterpillar and Boeing dropped 3% the trade bellwethers Caterpillar dropped 3% and Boeing dropped 3.3% respectively. Semiconductor stocks like Micron Technology, Skyworks Solutions, and Advanced Micro Devices fell at least almost 5%. It was 4.6%. Apple shares dropped 5%. Nike dropped 3%. Retail stocks like Etsy, Abercrombie & Fitch, and Stitch Fix all fell at least 6.6%. Office Depot slid 7.5%. Party City fell 6%. Macy's and Best Buy pulled back, dropped 5%, and both of them dropped about 5% respectively. The SPDR and S&P Retail ETF dropped 3%, and FedEx dropped almost 5%. Now we have a trade situation that is going on off the rails as the side effects multiply due to the ramping up of the use of tariffs, and we're only further apart from any resolution with the Chinese, said Peter Bukhavar, a chief investment officer at Bleakley Advisory Group. The policy of using tariffs as a tool to address our legitimate beefs with the Chinese has failed miserably. China, which has historically controlled its currency, the yuan allowed it to fall to its lowest level against the dollar in more than a decade. The onshore yuan broke above 7 per US dollar and traded at 7.05. Trump 45 later accused China of manipulating its currency, saying in a tweet, "This is a major violation which will greatly weaken China over time. I doubt it." China appears to have decided that given the increasingly dim prospects of a trade deal with the U.S., the boost to China's export sector from currency depreciation is worth attracting the ire of Trump. Or they should have said 45. Julian Evans Pritchard, a senior China economist at Capital Economics, wrote in a note, "The fact that they have now stopped defending the 7.00 against the dollar suggests that they have all but abandoned hopes for a trade deal with the U.S. Multiple news outlets also reported China has asked state-owned companies to suspend U.S. agricultural imports, despite an agreement in June with 45 to resume purchases of U.S. farm products. These moves come after 45 announced last week the U.S. would impose a 10% tariff and $300 billion worth of Chinese imports. The tariff will take effect on September 1st. 45's announcement came after Chinese and U.S. officials discussed trade earlier last week as the two countries tried to restart talks. That tariff would target retail along with other consumer goods from companies like Apple. That tech giant told U.S. Trade Representative Robert Lighthizer in a June letter that tariffs on this tranche of goods would hit all of Apple's major products, hindering the companies contributing to the economy. The news pushed the S&P 500 to its lowest weekly performance of the year. The S&P 500 dropped about 3% last week. The Dow had its second biggest weekly drop of 2019, dropping 2.6%. Investors rushed to traditional safe havens like treasurers and gold on Monday amid the uncertainty. The benchmark 10-year Treasury yield fell to 1.74% and reached its lowest level since November 2016. Gold futures for December delivery gained 1.3% to trade at $1,476.10 per ounce.